All right, hello guys. Now this class is basically to help as a beginner's class, and the purpose of this class is to help you understand market orders and entry of trades. Market orders and entry of trades. So we're going to talk about market orders, and we're going to go on the charts and enter trades, entry and exit of trades. Now, in the market, all the time, what we are doing is giving our charts the command, as it were. It's called orders to enter the market and to exit the market, right? So when we enter a trade, when we place a buy or a sell, that is an order we are giving the market, right? So there are different types of orders in the market. There is a buy order, there is a sell order, there is a stop loss order, there is a take profit order, right? So there's a pending order, there's a market order. So all of these are orders in the market that you take, right? But here we're going to concentrating more on entry and exit orders. Entry and exit orders, right? So to begin with entry orders, we start with the market execution or the instant execution. So market execution is the it's entering a trade at the moment, at this moment. So when you enter a buy trade right now, that is what we call a market order. You go on your chart and you click on buy now, and the trade is activated at this moment. That is what we call a market order. A market order. So it's activated at this moment, right? So you can do that for a buy trade or for a sell trade. Now, the reason why you do that is because you already expect the market to go in the direction you expect it to go to at that time, right? Now, there are times where you do an analysis on the market and you decide that the time to enter this trade is not now. You decide that the time to enter this trade is sometime in the future. This trade is not ready yet. I'm expecting to buy, but I shouldn't be buying at this moment, right? I'm expecting to sell. I'm expecting the market to sell. So, but I am not entering the market at this time. Why? Because price has not gotten to the target, to the area where I expect it to get to. So my entry price hasn't gotten to my entry price. So what I do is I set a pending order. Instead of watching the market every moment, every second, I set a pending order in the market so that when price gets to my entry price, it will activate automatically, right? So when price gets to my entry price, it becomes active immediately, automatically, without me being there at that time to place that buy or sell trade, right? That's what we call a pending order. So a pending order is a buy or a sell price, is a buy or a sell trade above or below the current market price. Therefore, waiting for a criteria for the market conditions to be met before that trade is activated, right? So there are two types of market orders. There's the stop orders, two types of pending orders. There are the stop orders and the limit orders. So for stop orders, you have the buy stop and the sell stop. For the limit orders, you have the buy limit and the sell limit. So these are all pending orders. Now in trading, you are going to use a lot of these because trading has to do with analyzing the market ahead of time. You analyze the market and you determine ahead of time where price is likely to get to, and then you place a trade, a pending order at that point, waiting for price to get there and then activate. All right. Now, this is the illustration of how these pending orders work. So first we start with a buy stop. Now, a buy stop order is placed above the price, and price keeps going up. So now for buy stop, price is already buying, but you expect it to continue buying after it goes beyond a certain point. So price is here right now where this blue ball is, but you're expecting price to continue to rally and then hit this green area and then break it through and continue buying. Now, at the time that price is at this blue ball, This trade, you want this trade to activate at around the green bar. So you set a buy stop around the green bar. At the time you set the buy stop, you have no trade running. Your trade is not active. You set the buy stop order around the green bar, but at that time the trade is not active. The trade is pending. You will see this trade as pending, right? So when price moves from the blue bar and gets to the green bar, the trade becomes an active trade. It activates in the market. It becomes an active trade. So from that point now, you are in the market. From that point now, your trade is running. You see? So yes. So from the green area now, the green area, price activates and price starts going up. So as price goes up from that green area to anywhere it goes to, that becomes your profit. Your profit is building as price continues to go up. You see, that's how buy stop is done. So price is already buying. You expect it to break a certain level or hit a certain level, a certain price level, and then continue buying. That's a buy stop. Now for a sell stop, it's basically the opposite of that. Now price is selling already, price is coming down, and you expect that price will hit a certain level, which is this red level here. You expect price to hit this red level and continue selling. So what you do is you set a sell stop somewhere around here, around somewhere below the current price. So order is placed below the current price. So you set the price, you set the sell stop order below, somewhere below the current price. So when price gets there, price hits that point, which is in this case the red bar, and then the trade moves from a pending trade to an active trade. So you see the price will move from a pending trade to an active trade. As once price moves from the green bar to the red bar, it becomes an active trade. Now, as the price continues coming down as you anticipated, as you analyzed, you are in profit. You see? That is a sell stop. So these are pending orders. You can see that these trades are not like trades that you enter at this moment, or you expect the price to start going your direction at this moment. You expect the market to be active at this moment. No, you're not. The market is not active yet at this time. What you're setting is a pending order, an order that will be active sometime in the future. It could be an hour, it could be 30 minutes, it could even take more than that. It could take several hours for price to be active, right? Now we have buy limits. So a buy limit is a bit different. A buy limit and sell limit a bit different from the stop orders. Limit orders are a bit different from the stop orders. So now the way buy limit works is you're expecting price to buy. You are expecting price to buy, but price is currently at a certain level where you know that it will still come a bit down before it starts buying. Now this comes from the concept of pullback. It comes from the concept of pullback. Now, of course, you understand that at a higher class, at a higher level, but then it comes from the concept of pullback. So price is at a blue ball, at this blue ball, you're expecting it to buy overall, but you expect that it will come down lower first, come to this green area before it starts buying. So what you do then is you set a buy limit around the green area, around this green bar. That becomes your buy limit. So once price moves from this green bar all the way to this green bar, it activates. It moves from a pending order to an active order, from a pending order to a market order. And then as price begins to do what you expect it to do, all of that becomes profit for you. But until price hits this green bar, market is not active. Your trade is in the market, but it is not an active trade. This is a pending trade. So the same thing goes for sell limit. Sell limit is just the opposite of what we described now. Now you're expecting overall, you're expecting the market to sell. You're expecting price to fall. You're expecting the market to sell, right? Now, but price is still at a point where you expect that it's going to buy up a little bit. It will make a little bit of a buy to a certain level, in this case, this red bar, before it starts selling. So what you then do is that, remember, prices at this green ball. Once you then do is you set your pending order at the red level here, at the red bar. Your sell limit order will now be placed at the red level here, at the red bar. So what you're telling the market is, yes, price, you are currently at this point, I understand, but once you rise to this level, please activate this trade for me. So there's a time gap. There's a time gap between the time where you place your pending order, or between where the market currently is, the current price of the market, and the future price of the market where you expect your trade to be active, right? Yes, so that's the way it is. You enter that trade for a pending order at that time, and then you once price moves in your favor, you are in profit. Okay. All right, so now let's quickly do something here. Let's quickly pick a MetaTrader and show us something here when it comes to these trades. Okay, so this is a pending order, right? This is a MetaTrader. This is a platform where we enter trades. Now, for you to enter a trade here, you are going to pick an instrument that you want to trade. You're going to pick an instrument that you want to trade. Let's say we pick USD-CHF, right? We pick USD-CHF, and we want to trade on USD-CHF, right? Okay. So at this time, let's say we come here, and when we want to go through the different orders that we just talked about, market order, market order and pending orders, right? So in this case, let's say we enter this trade, USD-CHF. We want to enter, we come to new order, we click on new order. We select our lot size. In this case is 0.1. And we click on, let's say we expect this market to sell a little bit, where we click on sell. We click on sell, right? So this trade that we just took now is what we call a market order. It's an instant order. It's a market order, right? It's active at this moment. Okay, so that's it. That's a market order. At this time, you can see right now it's showing positive or negative. It tells you it's active at this moment, right? So now let's look at something here. Let's assume that we expect currently USD-CHF is selling, but we expect that after it sells to a certain point, let's say we expect that price will come to this point. Let's say we expect that price will come to this point, sell to this area, and then start buying. Let's say we expect that price is going to come down to this area here, and then now start buying. Let's say we expect that to happen, right? So what we will now do is that will be a buy limit, because we expect price to buy once it gets to this area. So if you are expecting a buy at a certain level where price is currently not at, that's a buy limit. If you're expecting price to sell to a certain level, or sell at a certain level where price currently isn't at, that's a sell limit. So in this case now, we're using a buy limit, right? We are expecting price to sell to this point and then start buying from here. Okay, so at that point now, what we do is we use a buy limit. So we'll come to new order. Again, we click on new order. So you see, it says market execution. We pick market execution, then we go to pending order. Pending order. So we're looking for a buy limit. But here, let's look. What else do we have there? We see we have a buy limit, we have sell limit, we have buy stop, we have sell stop, right? We have buy limit, we have sell limit, we have buy stop, we have sell stop. So here we are talking about buy limit. So we pick buy limit. Then we ask ourselves, at what price are we expecting this trade to be activated? At what price? At what price are we expecting this trade to be activated, right? So now we have seen our price here is 0.85612, 0.85612. So this becomes our price, 0.85612. That's our buy limit price, right? So we click on buy, place. Now you can see here, look at this trade. Look at this trade. This trade is a sell. You can see sell at 0.10 sell. But here it tells us buy limit. Now let's come down. Let's come down here. You see this? You see now, this one is an active trade, is currently running. But this second one here is a buy limit, which is not currently running. It's not currently running. It's just there at this time because price has not gotten to the point where it should be trading. Price has not gotten to the point where it should be trading. You see? So this is buy limit. This is market order and pending order, right? So let's look at something else. Let's see if we can get, let's say we do GBP USD. Now, for GBP USD, let's say we at this time, we are expecting price to buy, right? We're expecting price to buy at this time. We did sell for the other one. At this time, we're expecting price to buy. We click on market execution. Look at it, market execution. We click on buy now. Okay, so that is a buy order at this moment. That's a buy order at this moment, right? But then let's say we expect that the way GBP USD is doing, from the way it's playing out, we expect it to continue to sell, right? But where do we expect it to get to before it starts selling? Let's say at this time, we are expecting price to get to this point here. We're expecting price to get to this point. We're expecting it to buy, get to this area here, and then start selling. So what we do then is we set a sell limit. We set a sell limit at that point. We set a sell limit at that point. And what we are telling the market is, please go back up here. When you get there, please activate my trade for a sell. I believe this trade is going to sell, but I don't believe it will sell from where I think it will still go up before it comes down. And the reason for that is I don't want to trade in such a way that I put myself in a negative, into a negative position. We call it a drawdown. So if you have a trade now that's running and is currently running negative, that is what we call a drawdown. So in trading, what we want to do is we want to reduce our possible drawdown to a minimum. We want to reduce the possibility of having a drawdown to a minimum, because if you have a large drawdown, you will have to close your trade in negative, even if your trade was right. Even if you were right on that trade, your trade you will have to close your trade in negative if your drawdown becomes too much, so that you don't lose so much money. So that's the reason why entries are so important. Where you enter a trade is so important. Where you enter a trade is so important, right? So we pay attention to entries because we want to minimize drawdowns. We want to make sure, because we don't know perfectly where we need to pick our trades for it to start going our direction. We know that, okay, market can still go up or down before it starts going our direction. But we do not want that huge swing where we are in a huge negative before price starts doing what we expect it to do, right? So that's the reason why we use pending orders, and we're trying to get our entries as good as possible. We want to get into the want to be able to get into as good as possible. We want our entries to be as good as possible, right? Yeah. So in this case, what we do is we go to new order, click on new order. All right. So we go again where you have market execution, we click on pending order. Pending order. But in this case, we're not doing buy limits, we are doing sell limits. So we go here, we click on sell limit. Sell limit. So where is the sell limit price? Because for us to do a sell limit, we have to get an entry price. So in this case now, our entry price is 1.26700. 1.26700. So we click on place. So you see, it doesn't tell you buy or sell, it tells you place, because you're just placing a trade. You're just placing a trade. You're not that trade is not active yet, right? So you can see now sell limit at 0.2. So the trade is not active yet. Okay, so now let's say I want to close this trade out. I can click here and then I close that trade. Now I've closed my trade out, the current trade I have running, but I still have my pending order because price has not gotten there yet. So I'm expecting price to get to this point and then become active. So you see now, you see the green line? The green line is where my price is, where my entry is. I'm expecting price to get up to my entry and then start selling. That is my goal. That is my goal for this trade, right? Yep. Now let's look at something briefly here. So let's look at profit, take profit and stop loss. Okay. Now we'll discuss this more in another class where we're talking money management, but this is just to help us with exits. Now, when you enter a trade, right, be it a buy trade or a sell trade, there are two possibilities. It's if you enter a buy trade, you're expecting it to go in your direction, right? You're expecting it to start rising when you enter a buy trade. Then if that trade starts to do what you expect it to do, it starts buying, you enter a buy trade that starts going up, then you are in profit. But if that trade doesn't go up and it starts coming down, it tells you that you are in a losing position. You are in a drawdown. Okay, you are in a drawdown. The difference between a drawdown and a loss is that when you are in a drawdown, the trade has not closed. So you see negative, but the trade is still running. So there's a possibility the trade can reverse and go into positive. That's why it's called a drawdown. But if the trade closes totally in negative, that's when it's a loss, right? That's when it reflects in your balance, right? Okay, so now look at this. You enter a trade here, you expect it to buy. If it buys, then you are going to buy. You have it will buys, then it gets to your take profit. Your take profit is your target, which is your reward. Like I said, we'll discuss this more during our class on risk management, right? So you're expecting it to rise to somewhere where you're going to close your trade. Just the way I closed that trade now. I closed that trade and I took profit. That's the kind of thing I want to do. I want the market to be able to do that for me. Then I also have in my mind that if this trade I take, if it doesn't go the way I expect it to go, I want to be able to cut my loss and as easily as possible, cut my loss with a little amount of money so that I can keep my capital for the next trade. That's where I set my stop loss. So stop loss is a mechanism. It's an order too in the market. Take profits an order. Stop loss is an order. You set it in the market to help you and to help you exit trades at a small loss so that you can keep your capital for the next trade, because we know that trades cannot be profitable 100%. You don't need 100% winning trade in order to make money. No, absolutely not. You can win 60% of your trades and you are in massive profit. You can win 50% of your trade or 70% of your trade and you are in massive profit, right? Yes. So that's what it is. That's for buy. So when you enter a buy, you expect price to rise. You set your take profit and you set your stop loss. So for a buy trade, a stop loss is somewhere usually set at somewhere below your entry price. Why a take profit is definitely above, because you expect price to rise, right? So this is the kind of trade we're talking about here. So you enter a trade here, right? And this is the entry, this green level here, buy at 0.01. Now you set your stop loss below the trade and set your take profit ahead. So you can see they are all orders. You are telling the market that, hey, I'm telling you, this is what I want you to do. If this trade goes against me to a certain level, please close my trade and I'm out. If this trade starts going in my favor, reaches a certain level, please bank my profit for me. Bank my profit. Close the trade and keep my profit for me. Right? So this for a sell trade. So when you enter a sell trade, you are expecting price to fall. You're expecting price to come all the way down. When price starts doing that, you are in profit. But if price doesn't do that and it starts to rise, you are placed a sell trade and price starts to rise, what you do then is you're going to, therefore, for every trade you take, definitely you set your stop loss and your take profit. Your stop loss helps to mitigate the risk. So you know that Not all trades are going to be profitable. And the truth is you don't need all trades to be profitable for you to make money. So for a sell trade, you set your stop loss above your current price, where your current price is. Why? Because you expect price to come down. If price is going to come down, your take profit is going to be down. So when price is coming down, that's when you're in profit. If price starts going up in a sell trade, that is bad. That is negative, right? So let's quickly do something here. Let's see. So in this case now, we're expecting price to activate here, right, for a sell trade. So what we'll do is we will set our stop loss and take profits. So let's try that first for USD CHF. So USD CHF here. So now for USD CHF is a sell trade. USD CHF is a sell trade. So we're expecting it to come down. So our take profit is going to be down. Our stop loss is going to be above. So let's do that. So we'll put our stop loss above here. So what we are telling the market here is that if price goes against me, please close me out at a small loss so that I can keep my money for the next trade. But if this trade goes in my favor, when it gets here, please close my trade for me in profit and help me put it in my account. So we modify the trade because this trade is normally when you're entering a trade, you have the possibility of entering your stop loss value and your take profit value before you click on buy or sell. But in this case, we didn't do that. So we entered the trade ahead. Now that we've entered the trade ahead, we want to now place our stop loss and take profit values there because we know that we want to be able to maintain risk. Because if you have no stop loss on your trade, then there is you have no mechanism for maintaining risk. You are literally telling the market to do whatever it likes to you. And that is not a smart way to invest because you are an investor as a trader, right? So in this case now, we are going to modify this trade we already have running in order for us to set our trading parameters, which is our stop loss and take profit. So in this case now, what we do is we modify our delete order. Then we take this number. This is the stop loss, 0.8182, 0.86182, 0.86182. That's our stop loss. Our take profit is what we'll do here, 0.85612, 0.85612. So we've taken our stop loss, we've taken our take profit, we click on modify. Now our trade is set here. So we have, so you see here, SL, TP. TP is here. Now the reason why you're not seeing this is because we also have we also have a pending order buy there. That's why you're not seeing. But when you look closely, you see that there's a TP somewhere inside here. So this is a trade now. We're expecting price to hit this point and be active, hit this point, and then hit our take profit here, and then become active from there again on the next trade, which is our pending order buy. If this trade doesn't do that, it goes against us, we'll close out at this stop loss right here. I hope we understand. Okay. Now for GBP USD, the same thing here. We're expecting price to activate around here, right? So what we need to do on this one is we set our stop loss and take profit. Let's say we set our stop loss at around this area. This is our entry on this trade. Then our stop loss is going to be above. Remember, this is a sell trade. If it's a sell trade, our stop loss is going to be above because we don't expect price to rise. We expect price to sell when we are selling. So in this case now we are selling. So we are expecting price to rise. We are expecting price to fall. So if price starts rising, we want to be able to mitigate the risk there, right? So what we do now is that we come to this trade. What's that now? GBP USD. We click on modify, right? Modify. So let's say we're putting this here as our take profit. This is our take profit, is our stop loss. So we modify the trade. Now, like I said, just for the way it is for ordinary trades, which is an active trade, market order. For a pending order, you can also modify it, right? So you can say modify, delete. Modify is not highlighted because we've not put our parameters, our numbers there. So let's put it now. We're expecting a sell trade here, so we put a sell limit. So now for stop loss, we're going to have 1.26952. 1.2695952. Okay, so you see modify is highlighted now, right? Then take profit is 1.26263. 1.26263. You click on modify. So with modify now we've modified this trade. This trade is going to activate and then close by itself because we have our parameters in place already. All right. So guys, this is how you enter trades and exit trades. I'm doing this on my laptop right now. You can do this on your phone as well, right? Maybe on another session, I'll explain deeply how we can do it on the phone. But we have classes where we've already done that. We're definitely going to do that again for people who are new to this new here, so that we can show you how you can execute this on your phone. All right. Okay. Thank you, guys. I'll see you on the next session.